following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, joining us live, NinjaTrader Live, is Dan Gramza, Gramza Capital Management. Dan, good morning. How are you?
I am terrific, Jim. How are you doing?
I'm doing pretty good, man. I'm doing pretty good. It's great to see you today.
Thank you. Same here.
Awesome. How are things in Chicago? How's the weather holding up?
It is terrific. A little rain later tonight, but it's been last couple days outstanding. I mean, you're used to that now where you are, but for here, spring has sprung, we hope.
So we're to the point, Dan, where we've transitioned to you're always wearing shorts.
Oh, wow. That's nice. We're not that well, we're almost there actually. Today could be one of those days.
Yeah, yeah.
Tomorrow, we could have snow, so not really sure.
Yeah, I remember those days. Don't miss them.
Yeah, I'm sure you don't.
We're here talking about, so Canada, we don't talk a lot about Canada, and today's perfect timing because Canada, they had their CPI that came out this morning, year over year, 2.9, which was what was forecast. Their month over month was, these are headlines, was 0.6, forecast 0.7. But it's a major trading partner of the U.S., isn't it?
It is. In fact, what's interesting about that is that Canada and the United States, our trading relationship, it's the largest in the world. In 22, we did like $909 billion of trade between our countries. So it is a biggie. It's our number one trading partner. It's about 17% of our trading that we do with the world is Canada. And for them, we're their number one trading partner. And for them, it's United States by far, and then China, Japan, UK, Mexico, they're their top trading partners, but it is a biggie. It is important. And we have future contracts on a lot of the things that are exchanged between our countries.
Yeah. So, but before we go there, do you think there was an uplift in trade? And I don't know the answer to this. When, in 2020, I think we got rid of NAFTA and went with the United States, Mexico, Canada agreement, which was supposed to be mutually beneficial. Do you think those kind of agreements do help?
Well, I do. At least it puts some parameters around some of the issues of how we work together. So I think it is positive in that regard. It gives some rules based in the sense of how we work again together in that regard. So yeah, I do think it's positive. Whether we've seen a dramatic change though, as that agreement came into effect, I'm not so sure that it's really had a huge impact on our trade between our countries. Not only do we have the geographic issues of being right next to each other, but there's flows that stay consistent. There are industries that really depend on those flows. And unless something dramatically has changed, they're going to stay fairly consistent. And I think that's what we've seen so far.
Yeah, and I mean, I actually read part of it, or at least the bullet points about it, and it seems to be the focus was on protecting union workers on both sides.
Right.
So
and so if that's done, that's terrific. But again, I don't think it was dramatic in terms of shaking our relationships with our friends in Canada as well as Mexico.
Yeah, and you mentioned that there's also, there's many different futures markets that, are related to product that we get. Right away we think of course, sand oil. We think of crude and energy.
Right, right. Those because they're the most common ones we have with them. But they if you think about Canada, I always think of that as a group of countries, actually. It's referred to as a commodity currency. So we have, that crude oil. It's a resource-based economy. I guess that's the way you want to think about it.
Yeah.
So their economy is driven by their exporting and processing some of their resources. But we see the same thing with our friends in Australia and New Zealand, the Kiwi. So those are also considered commodity currencies. And again, like going back to Canada, we do typically think of crude oil because it is the biggest import. We buy more crude oil from Canada than any other country. Canada's number one, Mexico's number two, Saudi Arabia's number three.
Right,
So we
by a long shot too. I mean, my last Canadian numbers were we were importing about 4.4 million barrels a day.
it's right. And what you said at the beginning is really important. You said tar sands. That type of crude, it's difficult to process.
Mm-hmm.
And where can they process it if you're in Canada, United States? If you look at Texas City near Houston, if you look at Louisiana up and down the Mississippi there, I've been to both of those areas. Our ability to process crude, about 80% of our crude's processed in those two areas, and we can process that heavy crude that Canada has, and that's part of our trade, really. We import that, we process that, and if you look at their imports, refined petroleum products is one of them, and it comes from us. We do the same, by the way, with Mexico. Mexico has heavy sour crude. They send it to that Gulf area, we process it, so they can get it back. Basically, we sell it back to them.
So that's a good point. So this is sour crude that we're getting, right? It has a higher sulfur content, different specific gravity. It's a harder raw ingredient to process than what we get out of the Permian, right? Light sweet crude with the lower sulfur content.
Exactly right, Jim. It takes more steps to process it. Not only that, your yields are less. You get less gasoline, for example, out of heavy sour crude than you would light sweet crude. And it's just, again, those terms that people aren't familiar with, that heavy just means it has a lot of paraffin in it. It's the specific gravity is different. So it takes a little more processing. And the sour means it has more sulfur. So, and our crude that we produce a lot here is light and sweet. So our ability to process it is a lot simpler and we get higher yields from it. And that's the benchmark that people compare other products to. So heavy sour, for example, would be cheaper than light sweet.
Yes. So, but let's talk about the benchmark now that you open the door here a little bit. So we have these benchmark types of crude, right? And if you think about it, we import 1/10 the amount of oil from Saudi Arabia as an example. Yet there's oftentimes a bigger focus on OPEC plus than there is on what's happening in Canada.
Well, you're absolutely correct from our point of view. But then when you touch OPEC, you're talking about the global point of view. And the world consumes about 100 million barrels a day of gasoline, for example, or of crude. And we consume in the United States about 20 to 25% of, if you can imagine, a big barrel of oil of 100 million barrels. And the rest of the world takes their piece as they come to that. So when OPEC Plus and Russia, which includes them, when they take 2 million barrels a day off of the shelf, off of production, Well, it has an impact on that big barrel of oil. Therefore, supply's tighter and prices should go up a bit. But for us on the home front in the United States, it has an impact, but a little bit less of an impact. And as that global supply changes, we see it also in the price of gasoline here. And so it's not so much our Canadian relationship or Mexico, but it's that global picture that still feeds us in terms of our economy. That's what's so amazing, Jim, is how we are all really connected economically. And there is no best interest in any country to go at war against another country without creating some impact economically. But we still see goofy things happening. But
yeah, so Tom Schneider had a great comment this morning. It's like, when in the schoolyard, when someone punches you in the face and then runs away, like, all right, we're done fighting. It almost seems like what's happening here with the Iran situation.
It is. It is. And the issue is, where do you draw the line? Iran says, hey, look, we did enough. You guys did something to us in Syria, and now we're done. So the ball is really back in, Israel's court in terms of what they want to do and how they want to respond if they do. And it does go back to that tit for tat. Where does it stop? And the thing about it is, which I do find interesting, is they said, well, see, Israel really wasn't hurt. But remember, they shot 350 rockets at them. And it just because of their defense system, it didn't cause a problem for the citizens of the country. If they didn't have that, we would be having a different conversation.
Yeah, but it's kind of like a hornet's nest, right? If you just bump up against it, you didn't hurt anything, they're still going to be pissed off hornets.
Yep. That's a very good summary statement, Jeff.
So I know. Well, let's go going back to Canada. Let's talk about these pipelines. We've heard about the Keystone Pipeline forever. We have the Trans Mountain Pipeline, the Enbridge Main Line, and Express are some of the four major ones. Let's talk about that pipeline, right? It seems like the most efficient way to get crude anywhere.
It is. The other issue we have, and again, let's think about the processing. Why do we need that? We need it not only to get it to the spot where they process it, but then also for distribution. I mean, the other choice, and we saw this when the fracking became more popular, especially horizontal drilling in the United States. Well, we didn't have pipelines to those areas. The Permian Basin, for example, or the Dakotas or Marcellus, we didn't have pipelines, so we went to railroad cars. And it's not really the most efficient way to do that. But if you look at railroad transportation of crude oil, it went exponential during those periods. And that somewhat calmed down. The Keystone goes back to, how do we get those tar sands that you brought up down to the Gulf to process it? And that becomes a transportation issue. It's one thing to have a find. It's another thing to produce it and get it someplace. It's like lithium. We have huge lithium discoveries in the West, but we still have transportation issues and other things at hand.
Yeah, no, I get you. I mean, when you think, so the one pipeline is an example, the Trans Mountain, it goes to Seattle. So my guess is a lot of that crude ends up on vessels, right? Going somewhere, being exported to somewhere other than the United States.
Yes, that's right, because of their port capabilities there. So it's that you're hitting it right on the target. It's that transportation issue that you have to think about when it comes to a commodity, any of them actually. Where is it produced? Can it be moved? And is it done efficiently? Where's the weak spot, right? Where's the weak spot? And that's what we're thinking about when it comes to movement, especially with commodities.
Right. So another example is the Enbridge main line. It goes, and I scratched my head only for a second, but it goes to Chicago as well as Cushing, right? Cushing makes sense to me, but Chicago has that Whiting refinery there on the
Well,
lakefront.
you're right on target with that too. That's a BP facility. I've been there. It is immense. It's one of the largest refineries in our country, and I think it's surpassed now by a refinery in Texas City. But that pipeline that you're talking about, it feeds that refinery, and you're right on target. It feeds a total of 6 refineries in the Chicago area. That line goes down, then we'd really see high prices here in Chicago because we'd have to get other ways to get product to get refined. So you're right about Whiting. That one is a biggie, but there's 5 other refineries that also need that pipeline.
Southern Illinois also seems to have a destination called Wood River. I haven't figured out what that is yet. It just seems like a strange place.
Well, it goes back to logistics, where if you produce product there and you want to transport it, where does it tie into?
Yeah.
If you look at a pipeline map of the United States for crude oil or nat gas, it's immense. And we do have it crisscrossing all of our country. And what's interesting about that, with that huge network, and going back to what you just said, the fact is it functions every day. We don't hear anything about it. People are saying it's so dangerous. Yeah, there are some concerns, but the fact is we have a lot of pipeline in our country that has been functioning for years without incident.
Yeah, and the concern is leakage, maybe from an environmental damage point of view. And my guess is that would probably be more extreme when you're in a region where the weather varies a lot from hot to cold.
Well, that does have an impact, but I think our ability to monitor what's going on in our pipeline system has improved tremendously. So, and one of the ways they would do that is you're seeing a pressure gauge all along that pipeline system, right? And if you and I see that pressure changing, well, then it's going someplace that we're not planning on. And so our ability to detect it and respond to it is fairly efficient. And we know more and more about how to build those and where to put them. Like in our area where I live, 4 foot is the frost line. So if we're going to put a pipeline in, it's got to be below 4 feet. So it doesn't have some of the weather concerns, and it has a consistent temperature. Where you are, I don't know what the frost line is there, but probably a lot higher than 4 feet.
There might not be one. I don't know.
You're right. It may not be one.
No, there's been, we'd have a week of 25-degree lows.
Yeah.
So maybe.
Yeah, that's not consistent enough.
I know. Anyway, lucky me. All right, so we know we're getting a lot of commerce through the energy facilities. What about I think lumber when I think Canada.
Yeah, well, that's a good point. That is a biggie. Canada, if you think about some of the things that they also export, sawn wood is a biggie for them. It's one of their top. They're a world leader actually in lumber, wood pulp. Asia is a big consumer of that. Another country that has a lot of that is Australia. In terms of wood pulp that they use in a variety of products. But if we go back to that, let's think about United States. Our northeast and northwest part of our country is where we have our softwoods that we harvest on a regular basis. And softwood doesn't mean it's soft. It just means that the resin in the lumber, in the tree, has little channels that it can go. Hardwood doesn't have that. So that's the difference. It's not hard and soft. But anyways, that production that you're referring to in Canada, also in the United States, and those regions are what supplies our building industry. And, one of the things that we saw coming out today is building permits, building starts, right? So we
Yeah.
say, well, what does that mean? Well, it means what is the future expectation for housing permits? That's what it tells us. And a lot of people are concerned that with higher rates, mortgage rates, that people will not be building new homes, which means lumber consumption going to go down. Remember, Jim, just a few years ago, when we had issues with our mills in the Northeast and Northwest, look what happened to lumber prices. They shot up, and it's one piece of that inflation issue that we
Yeah.
have, right? That
Yeah.
feeds that as those higher prices come through. And we saw things slowing down. So now we've got a couple things there. One, do people have money? Are they willing to spend it? Retail sales yesterday says, looks like it. And are they willing to make a long-term commitment in terms of building a home? That's a huge commitment
Yeah.
money-wise, right? So it's a barometer that we can look at, which is a measure of our economy and our health of our economy in that regard. So that lumber issue that you're talking about, although people feel fairly removed from it, it's an important piece.
So Dan, let me ask. So our month over month, I think building permits were down 4.3%, which was a pretty big number. And let's assume that trend continues for a while, suggesting maybe lumber demand will be less. Then what happens with the supply chain?
It just builds up. That's really what happens because you have harvesting going on, you got the mills operating. That process that happens, even though you can stop it, right? But it's not an easy thing to stop and start in that regard. So we'll build our supply. Here's the thing. What you just mentioned, housing permits, housing starts, right? That's a consumption of lumber. Another one, which is a bit sad when we think about it, it's natural disasters. And we've had a few. Every year we have tornadoes and hurricanes that create terrible situations in our country. That has to be rebuilt. And that also can soak up some of that supply. So you don't really want to slow down that supply too much because that demand from that aspect of disaster isn't necessarily going away.
So, but as inventories build, right? Let's say we're building these inventories, we're storing this way. Is it kind of like storing crude oil, where there's a point where you want to get rid of this inventory, so you're going to reduce your prices to make room for more inventory?
It is in the sense of a commodity. Yes,
Yeah.
it is. Our storage capabilities, though, are a bit different when it comes to that, right? Our ability to store lumber, it's a lot easier than storing crude at a certain point in terms of capacity. If we look at the tank farms around our country, which there are a number, we do get near that filling up the tank. And then where do you put it?
Yeah. Summer blend,
Well,
winter blend. You got to
yeah,
make room for the summer blend. Yeah.
that's exactly right. And when we think about crude oil, we really want to think about the big picture. If we're interested in that, well, then we should be thinking about how much crude's in our pipelines sitting there. If we look at what happens globally with crude, we have, I can't remember the number right now, so I don't want to quote anything, but the amount of storage we have in super tankers that are now acting like warehouses. They're not moving the crude anyplace, but they're getting filled up. So we'll see that.
Crude on the water, they call it. Crude on the water.
Exactly right. Crude on the water. So that's another area that we could monitor to see where supplies are. And then how much can our refineries process? and that's the utilization rate. Then we'd say, well, 100%, right, means all our refineries are operating at maximum. It doesn't do that. But if it's in the 90s, we're up there. And the thing that gets me too with that, when you think about crude oil, it's when usually politicians will say, we got to produce more crude. They don't build new refineries. That's the problem. Well, we haven't built new refineries probably in over 30 years. The cost, the regulations to build a brand new refinery, it's tough. And it's not going to happen overnight. But in fairness to the industry, our production capabilities at existing refineries have increased 50%. So the industry does want to respond to it, and they have in that sense. The other tricky bit, Jim.
So Dan,
real
quick. It's really, so I think what you're saying is it's easier to take an existing facility and increase its capacity than to build a brand new one.
Exactly. Huge difference. The time, the ability to get the right permits, the technology that you can implement in an existing facility, if you got room, is much more efficient. And that's what we see. And the other issue, if you and I were an oil company and they say, produce more, build a new refinery. All right, that's going to cost me billions. Do I make that investment? What's my long-term return? And if we're supposed to go carbon free, do I want to make that investment? It's another issue that comes into play there.
Yeah, interesting. So we have a few minutes left. Let's talk about the CME Group's Canadian dollar US Forex cross.
Yeah. Do you want to take a peek at it or?
Sure. We can pull. I have a weekly chart up, nothing too fancy, right? Just a weekly candle chart with some moving averages, which we could ignore. But this is what is the primary drivers for this currency pair?
Well, one of them is going to be interest rate. And what we're seeing here on that weekly chart, I think, is an orderly market, right? If you look at those lower levels where you see the bottom, those support lines, and the same thing on the top, we're seeing levels that, and to me, when I see that, it implies hedging. It gets low enough to find buyers, high enough to find sellers. That's why you'll see that. People don't associate that with financial markets. They usually think about it in commodities, and we can see that in commodities by price behavior, where the hedging's coming in. And that's part of what we're seeing here. I think that not that there's not opportunity, that's a pretty good swing in these markets. So there's volatility, there's trading opportunity, but I just think it's where the economies are right now. We're not, I don't want to say on hold, but this reflects where our economies and interest rate policies are, I think, in that chart.
Okay, so is it more of a matter of like the competing central bank interest rates, or is it the overall economic engines of both companies, or both countries?
Yeah, it's both. I mean, it goes back to what's being anticipated. Right now, if we think about our friends in Canada, think about the Bank of Canada, their interest rates around 5%. We're at 5.25, 5.5. The feeling is their inflation is coming down. They're below 3%. And so the expectation there is before the year is out, they will be getting near, if you listen to their Bank of Canada, they're getting near that 2%. So they'll probably be quicker to lower their interest rates than the United States. And if you look at currency and demand, interest rates, when it comes to that currency, money flows towards a higher return. So if interest rates go up, in our case, our country, they stay higher than what we see in Canada, that would imply more demand for US dollars, less demand for Canadian currencies. So that could dampen that currency a little bit.
Sounds like we should keep track of these central banks. Dan, I appreciate your time. We're up against time, by the way, me and you.
Oh,
I appreciate you being here with us today. We're looking forward to talking to you again.
great. I'm looking forward to it too, Jim. Take care.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.